Welcome back to Finance Bros, your premier destination for financial literacy and sophisticated investment tactics. In this session, we're delving deeper into a critical strategy used by savvy investors: how short selling works. This technique, often seen as controversial, allows investors to capitalize on predicted market declines and adds a layer of complexity and strategy to portfolio management. Whether you're exploring short selling to hedge your portfolio or to speculate on price declines, understanding the ins and outs of this approach is crucial. Stay connected with Finance Bros, where we unravel complex financial concepts to empower your investment decisions. Now, let's embark on an exhaustive exploration of short selling, covering its methodology, risks, strategic applications, and ethical considerations, equipping you with a nuanced perspective on this powerful investment tool. In-depth exploration of short selling mechanics, transactional flow. Start with a step-by-step breakdown of the short selling transaction process, detailing each phase from initiating the borrow to executing the sale, and finally covering the position. Borrowing costs. Discuss the costs associated with borrowing shares for short selling, including interest rates and fees, and how these costs can impact the profitability of short selling strategies. Market mechanics and pricing. Analyze how short selling influences stock prices and market liquidity, including the potential for short squeezes, where rapid price increases can force short sellers to cover their positions prematurely. Advanced risk analysis, unlimited loss potential. Elaborate on the concept of unlimited loss in short selling, using historical examples to illustrate scenarios where short sellers faced significant financial pressures during unexpected market rallies. Regulatory risks. Dive deeper into regulatory considerations, discussing historical and recent regulatory changes impacting short selling and how investors need to stay informed to navigate these rules competently. Counterparty risk. Address the risks associated with the counterparty from whom shares are borrowed, including the possibility of recall and how it affects short selling strategies. Strategic applications of short selling portfolio. Diversification. Expand on how short selling can be used to diversify investment strategies, providing examples of how it can offset long exposure and reduce overall portfolio volatility. Market analysis tools. Introduce tools and metrics that short sellers use to identify potential short targets, such as high price-to-earnings ratios, deteriorating company fundamentals, or bearish market technicals. Sector-specific short selling. Delve into strategies for short selling within specific sectors or industries, highlighting how macroeconomic factors, sector trends, and individual company performance can inform short selling decisions. Ethical and strategic considerations, market impact, and morality. Discuss the ethical considerations of short selling, including its impact on companies, employees, and the broader market, and how public perception of short selling has evolved. Institutional versus retail short selling. Compare and contrast the approaches and impacts of short selling by institutional investors versus retail traders, including differences in scale, information access, and market influence. Case studies and lessons. Learned. Present detailed case studies of notable short selling campaigns, examining the strategies employed, the outcomes achieved, and the broader market and regulatory repercussions. Practical advice and best practices conducting due diligence. Offer guidance on conducting thorough due diligence before initiating a short sale, including financial statement analysis, market sentiment assessment, and regulatory environment review. Risk management techniques. Provide advanced techniques for managing risk in short selling, such as using options for hedging, setting disciplined stop-loss levels, and understanding position sizing. Continuous learning and adaptation. Emphasize the importance of continuous learning, staying updated with market news, regulatory changes, and evolving investment strategies to remain effective and compliant in short selling practices. Conclusion: short selling is not just a strategy, but an art that requires deep market knowledge, risk tolerance, and ethical consideration. By mastering the various facets of short selling, investors can enhance their ability to navigate bearish markets, capitalize on overvalued assets, and add a strategic edge to their investment portfolios. Thank you for tuning into Finance Bros as we thoroughly dissected the world of short selling. If this detailed guide has enlightened your understanding or spurred further curiosity about investment strategies, please like, share, and subscribe for more comprehensive content. Engage with us in the comments below, whether to share your insights on short selling or to seek advice on intricate financial maneuvers. Together, let's foster a community of informed, ethical, and strategic investors. Stay informed, stay strategic, and leverage your newfound knowledge to make astute investment decisions with Finance Bros.